Why do you think Bitcoin had this massive pump yesterday? Crypto Twitter explains it as the Greyscale news. But I'm sorry, I have to disagree with the majority. Again, do you think Apple pumped 2%, Google almost 3%, Amazon, Nvidia 4%, and Tesla pumping 7.6% because of Greyscale versus the SEC about Bitcoin? No. I think there is a completely different sequence of events here, which is much more useful because you can actually use it to trade and make money. And I'm not telling you this after the event. Did you watch yesterday's video? Otherwise, maybe you want to switch on notifications right now. I posted yesterday's video the 29th of August at 1:20 UTC. And if you check the last chapter of the video, I said this. There's something very important and very interesting happening on the 2-year yield. I have talked about this one many times. It was dangerously close here to the red line, but are we getting a rejection? Yesterday and today sure looks like it. This one has backed up yesterday and today. The question now is if that is enough to balance the negative news and send Bitcoin back into the middle of the range. Then 1 hour later, this happened. Let's go on the 1-minute charts, which I almost never do, but here is the time. At 1400 UTC, the US government bonds 2-year yield fell off a cliff. Now let's look at Bitcoin at the same time. Here is 1400 UTC and look at the volume bars here at the bottom. Can zoom in a little bit more. The same minute at 1400, buy volume starts coming in. At 1403, 3 minutes later, price has already broken out of this construction. At 1406, it has reached daily highs. But most people have not noticed what has happened yet. So here is where 100x or 20x leverage actually makes a lot of sense, because then you sit with factual information that the market hasn't really reacted to yet. I'm not advising high leverage for you, but I can assure you that large players take those positions immediately. So now, at this point, we have some whales with maybe a portfolio changing leveraged long position, and they are in profits. Price didn't retrace, they still hold the position, and most people haven't noticed the news yet. Say they got in at 1402 or 1403 here. Maybe 1 minute to read what has happened and 1 minute to log in and press the button. At 1410, it's looking really good for them. Then, what happens at 1420? 10 minutes later, we have this bigger pump. The earliest tweet I could find about the Greyscale verdict. This is 4:25 p.m. Swedish time, which is 14:25 UTC. 14:25 is here, but probably there was some news wire 5 minutes earlier, or someone closer to the action front-ran the publication by a few minutes, which would be hilarious since the whole point of the verdict was a rejection of the SEC's claims about market manipulation. Regardless, clearly here at 14:23 UTC, some people didn't understand what was happening and sold, but then probably more and more people saw the tweets here and price continued up. We can, by the way, take note of a very clean continuation symmetrical triangle here, which confirmed on the upside, took the local highs and reached its target. If someone still thinks that technical analysis doesn't work, let me do one more, because then we had the symmetrical triangle that broke on the downside, which also reached its target. Anyway, not the point of the video. The CEO of Greyscale tweeted the news at 14:28. By the way, this guy is absolutely hilarious. You have to follow him if you don't. He made a song where he's singing the verdict. I think it's absolutely spectacular. So what the court basically says is that the SEC's reason for the rejection wasn't valid. That doesn't mean it immediately gets converted to an ETF. That's the wrong conclusion. So was the sequence of events here just a remarkable coincidence? That we got the maybe best regulatory news of the entire year, 10 minutes after some whales definitely loaded up on some big leveraged longs. Maybe, maybe not, who knows? Maybe it's just that a good football player gets lucky. The reason doesn't matter. Fact is that it worked. We identified what looked like a rejection of the yield. If we go back on the daily chart for the yield, I've talked about this red line here for months in our Friday TA report that all members get every Friday. We got the rejection. I pointed it out in a YouTube video 1 hour before the big drop. It's this yield rejection of resistance that everyone is watching that caused the big pump in all these stocks and in Bitcoin. The Greyscale was icing on the cake. So why does lower yield mean higher prices in these stocks? It's very easy to understand. If we start with a reverse situation, if yields go up, you have more return on safe investments, right? Just put money in and cash out the yield later. Then less incentive to go after high-risk investments, right? Similarly, if yields go down, they are less attractive. Then money flows out of the bonds and into the speculative assets, which then go up. Some of you in our Discord also asked, why did the yield turn? Guys, it's resistance, but I understand you want a fundamental reason. The news that came out yesterday was that job offerings dropped to the lowest level in 2 years, and they also revised down the June numbers. Job openings declined by 338,000 jobs from the previous month to 8.8 million in July, marking the lowest level since March 2021 and falling below the market consensus of 9.465 million. So quite a lot lower than the prediction. So why does lower job offerings mean yield drops on the market? That's also very easy to understand. Decline in job openings means that the labor market is gradually slowing down. A strong economy means that the central bank has no incentive to cut rates. Signs of weakness in the economy means that Powell starts feeling that he has maybe overdone it now. Then it's more likely that the Fed will cut rates in 2024 so that the 2-year yield drops. And if we look at the CME FedWatch tool about what the market now thinks about the target rate outlook, we see this. Remember that the current target rate is 525 to 550. Market predicts that on the September meeting they will be unchanged, 525 to 550. And with a small majority they think it will be unchanged in November, December, January, March, but then a small majority think we will get a reduction in May. Here's June, more in July, more in September, and so on. But as you saw here, the market isn't sure. They feel we might actually get one more rate increase in November. And this wasn't here a couple of weeks ago. So the market is definitely uncertain. So small changes in data can lead to big changes in the probability. And I feel the great thing here is that you don't need to be a macroeconomist to understand these relations. This is all just common sense if you think about it. I'm just an engineer and I can understand it. Now the problem with fundamental reasons is that they are harder to predict. There were a lot of analysts predicting those job numbers wrong. It's much easier to just observe what looks like a rejection in the chart. And if you really want fundamental reasons, why did it reject the day before then, before the numbers came out? Well, perhaps someone was front-running the news. Someone had this information. Maybe they called their uncle. So one way to follow the big players and reveal what they are actually doing is by simply looking at the chart. They can't hide in the chart, not if they are doing big volumes. So just observe what happens and react to it. By the way, do you guys remember I talked about the Greyscale discount back in January, whenever it was? Back here. That was a fantastic investment. Even better than Bitcoin. Because not only has Bitcoin goes up since then, the discount has dropped from minus 50% to only minus 18% as of now. And I think we did a DCA show when someone, was it James, pointed out that ETH Greyscale Ethereum Trust had an even bigger discount. Was it here or here? That was a fantastic opportunity actually, because that discount has also dropped to half as of right now. Still bigger than Bitcoin because of course people think that the Bitcoin one will come first if it comes. Then I want to highlight something else. In another episode we talked about this news. BlackRock is an investor in 4 of the biggest Bitcoin miners. But I'm not sure this article on CoinMarketCap is completely correct actually, or at least not the why or what it means. BlackRock has index funds on behalf of their clients. And these mining companies are part of the Nasdaq index, for example. And because the miners have gone up in price, they become a bigger part of the index. And that could be the simple explanation to why BlackRock has been buying them. I'm not sure, I haven't made the calculations yet, but I just want to come back to this and say that it might not be that BlackRock is buying these for themselves to make profit. Now, before we go into my plan for Bitcoin right now, if you have taken my course, make sure you receive the Friday TA reports in your inbox. Otherwise, write to me and we'll check. They are really appreciated and I think they've been useful. Over the years, I've sent out well over 1,000 pages. It takes quite a bit of effort, so don't miss them. If you haven't taken the course, go to ctolarsson.com, press course and indicator. You get both the tech stock and cryptocurrency scope. Included for free are the Larson line indicator, the TA report every Friday, and the Discord access. If you have taken the course and you want Pro for portfolio management, alerts, and new coin discovery, press here where it says Pro. So my plan for Bitcoin then. It hasn't changed, guys. What I talked about yesterday happened exactly. That yield rejection was just enough to send Bitcoin back into the middle of the range. For now, I'm just happy. My portfolio pumped yesterday. Great day. From here, if Larson line remains down and we reject again at the range top, I might lighten the load a little bit more there at the range top. If we instead conclusively break out of the range on the upper boundary with a trend turning back up, I will add more there. Very simple. Nothing has changed in my strategy. This is a difficult stretch in the market. Many great traders have taken drawdowns this period. All the breakouts turn into fakeouts. There is no trend. We're just in choppy consolidation. I have not been chopped up. So I'm very happy about that. Everything going great, everything on track. And trending price action will be back on the menu. I can virtually guarantee that because it's just the nature of the beast. It's the nature of global technology. Right now, it seems like we're stuck in this range forever. But I can assure you that we will break out at some point. I covered Nvidia 2 days ago, link below. Now we have an interesting development in the Apple chart. Can you spot it? I'll try to cover that in tomorrow's video, so make sure you have notifications on. Thank you, tack. CTO Larsson out. Hej då!